We said 3:30, but we had some technical issues. Wendy is a mortgage broker with Nationwide
Hi.
Mortgage. She's been doing it for 20 years. So I just wanted to jump on with her and talk about some mortgages today. Wendy, what do you think?
Sounds great to me.
I think that people have a lot of questions, especially people that are buying homes, first time home buyers, especially. I think they get a little confused. I know when I first started real estate, I was a little confused too, as far as the different mortgages, especially FHA, and then conventional. I always thought that FHA was just for first time home buyers, but now I know better. So why don't we start with
No.
that?
Okay. So a lot of people are under the impression that FHA is for first-time home buyers, and I guess because it's FH, but first-time home buyers, but
Right.
it's not really. FHA can be any person buying a home um, can get an FHA mortgage. I think a lot of the misperception about first-time home buyers and FHA is because with FHA, you can put down as little as 3.5%. So the down payment is low. So it actually works better for first time home buyers. If you're actually, if you're selling a home and you have a larger down payment, then um, your recording stopped, Gina.
So
Do you
did
know?
yours. All right. I don't know. I think we're still recording, so
Oh,
keep
okay. So then
going.
I just
I don't
then
know
I
what
just
that was.
I just have this pop up in front of
I
me.
don't know what that was about, but we're still live. It's still counting, so I'm not
Okay.
sure.
All
Although
right.
it's
All right.
yeah, it's saying
We just have this
uploading
thing in
though.
front of us. Okay, no problems. So,
Does
like
yours
if you
say? Do you see anything?
I see like half of you. That screen is like
Oh,
right in front of us. I don't know if
I
that
s-
screen is recording. Do you have a screen in front of you?
I see. No, I see you just completely.
Oh, that's funny. It says your recording has stopped. Something went wrong and you aren't being recorded anymore. Everyone else is still being recorded.
No, so I just click it off. I don't know because down here on my controls, it's saying where I can press stop, and it's uploading though, which I don't know what that means.
Yeah, I don't know because when I click on it, it says leave site. So I don't know if I want to leave it or not.
No, you can
No, I
preview
don't.
your takes here when you stop recording, but I'm not. All right, just keep talking. I don't
Just
know.
keep going. So anyway, so if you already own a house and you want to go purchase another house, again, you can use an FHA mortgage, but usually when you sell your house, you have a larger down payment to put towards that new purchase. So I think like first time home buyers just go to FHA because it is a lower down payment. But even with conventional, there are loan programs when you can put down as little as 3% as well, as long as you
No.
qualify.
Okay, so if you could put down a low down payment with a conventional and a low down payment with FHA, what's the
What
difference? What?
what's the
Yeah,
difference? Okay,
yeah.
so with an FHA mortgage is really better for, I'm going to say, lower credit scores.
Okay.
You'll get a better rate with FHA if you have like a 640 credit score. If you go try to get a conventional loan, your rate's going to be higher.
Okay.
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 Also, too, when we are qualifying somebody for a mortgage, we use what's called debt to income ratio. That's the income compared to the money going out. And their ratios, we use the housing payment ratio, which is the front end ratio, and then you use the overall monthly debt payment, which is the back end ratio. um, with FHA, they're a little bit more lenient with the DTI ratios. So you could actually qualify for more. Of course, your payment's going to be higher, but you would qualify for more than you would with conventional.
Okay. All right. So I guess conventional is a lot more stricter with their guidelines as far
That
as
is
debt
correct.
to
Hmm.
income ratio and all of that. Okay. So then
Correct.
that's why a lot of the time first time home buyers go that way with the
Correct.
FHA.
And
Okay.
also, too, if you have lower credit scores, you're going to get a better rate with FHA than you would with conventional.
Okay. And then what are the other differences as far as conventional FHA? I mean, is it all the same like as far as PMI and all of that kind of stuff?
Okay, so there is a difference there. So with conventional, you do have PMI if you're not putting down 20%.
Okay.
But with that PMI, Once you reach 20% equity in the house, the PMI will go away. Not automatically. You do have to call the bank and say, "Hey, I'm at 20% equity. Can my PMI
Right.
go away?" Um, but with
Right.
FHA,
They're not gonna
but
call
with
you.
but with FHA, the PMI actually stays on for the life of the loan or until you refinance. So it doesn't matter how much equity you have in the house, you're always going to pay that PMI. So the goal really when a person goes into an FHA mortgage is to eventually refinance and go into a conventional mortgage when they reach 20% equity. That way they don't have the PMI payment.
Oh, okay, and you can do that. And
Yes,
now
you
to do that, is there any downfall to that going from a
no.
FHA to a conventional, or it doesn't matter?
Absolutely not. No, you may actually end up with a better rate if you go conventional. So as long as your credit scores are higher, right? So kind of like if you go into an FHA mortgage, again, you're if you're doing it because your credit scores are lower, right,
Okay.
and you're going to get a better interest rate, you kind of put yourself on a goal and a plan to improve your credit so that when you do refinance to conventional to get rid of that PMI, then you're going to get a better rate on the conventional side.
Okay. So now FHA conventional, those are the mortgages that you go for when you can show income, right?
That is correct. You
Okay.
definitely have to show income if you're getting an
Right.
FHA or conventional mortgage.
Now, though, there is a mortgage where you don't have to show income, right? And you can still
Well,
qualify
there
for a
there
mortgage.
there is if you are a self-employed borrower, right? A lot of self-employed people, they're self-employed, they really write off as many business expenses as they can, so when they're filing their tax returns, their income looks lower than
Okay.
what it really is. So we have what's called a bank statement program, um, and it's based on business bank statements. We look at the bank statements, we see the deposits going in as you're running the business, and then we use a percentage of that as the income. So
Okay.
there's not really a no income mortgage out there. You really do have to show that you have income, right? So a business owner has their income by doing their sales and it gets deposited into their bank account, and that's what we use as their income.
So what if you're employed and you're not showing income on the books? Not gonna happen.
No, no go. Mm-mm, got it.
Okay.
These
It
days
doesn't
you
matter
have
how much money is in your bank. It's not. It's gonna be a no go.
Oh, okay. So I am going to say that there's a loan program called asset depletion. So if you have a ton of money in the bank and you don't want to buy the house for cash, we again take that the assets that are in there and we use a ratio and a percentage of that and use that as income. So you're still kind of going back to showing income of some sort.
Okay. So what if you're wanting to buy a home and you want your spouse or your significant other has great credit but doesn't show a lot of income, but you show more income and your credit's not that great? What kind of loan can you qualify for a loan?
Well, you
Tell
can,
me.
yep, no, you can. So if both of you are going on the mortgage together, right? One has a little bit of income and one has more income, but one's credit is better and the other credit is lower. You can combine your incomes together, but we go off of the lower of the middle score. So we'd be going off of whoever has the lowest credit score, their middle score, whatever that would be.
Okay. And then that determines if you're going to get the loan or not.
Well, there's a lot of things that go into when you're getting the loan, right? We're looking at your income, we're looking at your assets, we're looking at your credit, we're looking at your debt to income ratio.
Okay.
So, depending on how much income both of you have combined and how much you're paying out on a monthly basis that shows up on your credit report is how we determine what your monthly mortgage payment is. So,
Okay.
it's not to say that you wouldn't qualify for a loan, it's really just the amount that you're going to qualify for.
Okay.
Does that make sense?
It makes sense. I'm just thinking along the lines of, scenarios of people that, are trying to buy a home and like I said, some people have better credit, some people don't have as good a credit, but they show more income. So I know that it takes a whole bunch of things to be able to qualify, but I guess one of the biggest things is your credit, right? That's probably the deciding.
Well, sure. I mean, I'm going to say You can get a loan with a 580 credit score, but you're gonna be scrutinized by the underwriter. Not that the underwriter doesn't scrutinize every loan, but well, you're gonna be looked at more closely when you have a 580 credit score, and they're definitely gonna look at your credit because they want to make sure that you have a good payment history. Because once you get that mortgage payment, they want to make sure that you can make that mortgage payment every single month, right?
Okay.
The
Yeah.
last thing that anybody wants to happen is all of a sudden you get into a house and then all of a sudden you can't make the payments, and then the house gets foreclosed on and you end up on the street, right? Nobody wants that.
Right.
So that's kind of why we look at a lot of different things. So really, if I'm looking at somebody's credit report and I see that they have a 580 credit score, I'm going to do a credit analysis and say, all right, let's do these little things first and then get your credit score up to at least like a 640 because you're
Okay.
going to be in a better position.
Okay. So, what would you tell a first-time home buyer? What's the biggest thing other than what you said about what you just talked about? Like, what's the biggest thing that you could tell them to help them decide what mortgage and how to get a mortgage?
Okay, so first, the most important thing to do as a first-time home buyer, or whether you're a first-time home buyer or even if you already own a home and you're going to sell your home and buy a new home, is really go through the pre-approval process. Provide your tax returns, your W-2s, your pay stubs, your bank statements, your and then the information to pull up your credit report. That way, we can analyze everything and say, okay, this is going to work now or it's not going to work now. And
This
when
is
I'm
yeah.
looking at somebody's information, I'm going to say, okay, this is what you're looking at. Sometimes people qualify for a higher mortgage payment than what they really want to pay. So we kind of go through that whole conversation and say, okay, this is the payment that you qualify for. Are you comfortable with that? Do you think you can make that mortgage payment every single month? Because you do qualify for it. And then most of the time people say, no way, I can't afford
Right.
that payment.
Right.
So then I kind of like bring down the payment and then equate it to the purchase price loan, the loan program, loan amount, property taxes, and all that, and get them to a place where they know that they can make that mortgage payment.
Right. And that is such a wonderful thing. I actually have heard stories where some mortgage loan officers are not as as good as you are when it comes to that. They just oh yeah, you could qualify this for this. Why not? It looks good on
Correct.
paper, but can they
Right.
actually afford it? That's
I
a
mean,
great
exactly, because we're not. Well, I mean, we're not like we're looking at credit reports, right? We're looking at credit reports. We're looking at your income. We don't know everybody's personal situation. Kids at home, babies growing up,
right,
they're getting married. Starting out in life. Like we don't know all that information.
right,
Do you like to travel a lot? Do you eat out a lot? You kind of have to, as a person buying a home, you have to take that all into consideration because you don't necessarily want to be house poor. You still
right,
want to be able to have that money to do life, right?
right. Yeah, you said it great. So let me ask you, because that's another thing people get confused. I'm pre-qualified. Okay, no, you need to be pre-approved. So
Correct.
go
Right.
ahead,
So
pre.
pre-qualified pretty much just means that you're getting on the phone with the lender and you're having a conversation with them and you're telling them what your income is and you're telling them how much money you have in the bank. But when we're looking at your income, looking at your pay stubs and your W-2s and your tax returns, we're going to look at it different than you are as an individual, right? It's something that we do every single day, all day long. And if you've most people have never, well, not to say most people haven't bought a house before, but people out there haven't bought a house before. They don't do mortgages on a day-to-day basis, right? So they're
Right,
they're just like looking at their pay stub and say, okay, well, I make this much. And then the lender that they're talking to says, okay, well, you qualify for this much. A
right,
pre-approval is looking at your tax returns, your W-2s, your pay stubs, your bank statements, your credit report, and doing an analysis to figure out really what you qualify for.
right. And that's the golden ticket when you're buying a house. Yep.
Absolutely.
Yeah, guys, just remember pre-approval, not pre-qualification. A pre-approval is gonna be you have that power to make an offer on a house that you'll love. with a pre-approval,
Correct.
pre-qualification. It doesn't mean anything.
No good.
Right.
Exactly.
So, anything else? So we talked about FHA. We talked about conventional. Is there more to conventional that we should know, or
Well, it's there's
so?
really, I'm gonna say there's really not a lot of crazy loan programs out there anymore, right? It's pretty
Right,
much conventional, pretty much FHA,
right,
VA. You can do 100% financing if you're a veteran.
right.
Which, if you are a veteran, that really is a great option. Um,
And then what about closing costs? What goes into closing costs? What I'm hitting you with the hard ones, Wendy.
I mean, it's not really hard. The reason why I'm laughing is because I know there are lenders out there that will kind of lowball closing cost. So, and then when you go through the whole process, again, first of all, when you're buying a house and you get in a mortgage, it is a little stressful, right? It's better to know what your closing cost and how much money you need up front when you're starting the process, as opposed to getting to the close, like you get you clear to close and then you handed your final closing cost, right?
Right,
So I know that there are lenders out there that will lowball the closing costs just to get the loan. And then at the end, they say, okay, well, this is what you really need to pay. So,
right,
which is crazy to me, absolutely crazy. So when I'm going over again at the beginning, the pre-approval, when I'm doing the analysis on the payment, I'm also going over closing cost and telling you how much you need to buy the house,
right. Okay, that's
right?
good. Right,
Right. So, um, with there's a lot of people involved in the closing cost, and a lot of the closing cost we as the lender are not really responsible for. So we have what's called the bank fees, and it's usually a processing fee and an underwriting fee, and generally every single bank is going to charge that. But all of the other closing costs we're not really responsible for. They're really third party people that are going to get paid. But we as the lender, the banking department, feels that we are um, the best option for disclosing all of those closing costs.
okay.
So you have right. So you have your appraisal fee, you have your credit report fee, you have your title fees. Your title report is actually ordered by your attorney. Um, and then at the end of the process, the title company will give a title bill. But when we're disclosing it, our title fees are pretty close. They're not like way off base. You've got owner's title insurance, lender's titles insurance. You have your here in the state of New York, you have mortgage tax. Whether the buyer pays mortgage tax, the seller pays mortgage tax. If the
Wait, not to
there's
cut
a
you off.
couple of
What about the state of Florida? Is there mortgage tax as well?
no, there isn't. No, actually, there isn't any mortgage tax in Florida.
Okay. Because you
I
do
don't, I don't think there
mortgages,
are, I don't think anybody pays any taxes in Florida, do they? Like
state
Florida's
tax? No.
a free
So
tax
you,
state, isn't it?
because guys, I am a realtor, obviously in Florida and New York, originally from New York, moved down to Florida now. Wendy does mortgages, does loans in New York as well as Florida, correct? So that's
Correct,
an
right.
awesome thing too.
Yeah.
So, and then when you said attorney, they don't use
They're right.
real
It's
estate
right. Yeah,
attorneys
I
down
kinda
here. It's
yeah,
the
I always
title.
kinda
Yeah.
I know. So
Yeah.
in Florida, you don't it's a non-attorney state, so you
Right.
don't have an attorney. So the real estate agent is responsible for the title stuff.
Yes. Yes.
Yeah. Yeah. So it's a little
Yeah.
bit different. So
Yeah.
New York is like the almost the only state that you get an attorney involved in. Otherwise, the real estate agent is taking over all of that responsibility. So the real estate agent does a lot of work.
Yeah.
Yes, they do.
Yes,
And
they
they move
do.
that transaction along very quickly.
Very quickly down here
Very
in
quickly.
yes.
30
Yeah. So,
days.
it's not
30
all,
days.
glory and, ritzy and we're all dressed up. We work.
Yeah,
We work.
that's for sure. Absolutely. And you work hard without a
Yes.
doubt.
Well, so do you. We all do, right?
We all
We work
do.
hard to help our clients, right, achieve their dreams. That's the goal,
Absolutely.
right? And make them
Mhm.
happy, right? It's nice to
For
see
sure.
see a
Yeah.
smile on their faces, right? when you're at
We're
that closing
happy,
table, right?
closing table, happy people. We like happy
Yeah.
people.
Yeah. All right. So I don't know. Is there anything else you could think of that people should take away with them?
Um, I mean, I don't really think so, but again, whether you're first time home buyer or if you're selling a home and you're buying a home, really the most important thing to do is get your ducks in a row, get your pre-approval
Right.
done, and don't be afraid of it. Because if you are going to buy, whether you are buying today or you're not buying today, you need to know where you stand in your
Right.
position to buy a house.
You know what I think too? I know people are afraid that's going to be a big hit on their credit when you pull their
Oh,
credit
well,
report.
okay, so there you go. That's a good point. So when you have your credit report pulled to get a mortgage, a couple of things. One, your score will go down a point or two. It's not dropping 50 points. It goes
Okay.
down a point or two. And it's the same thing if you're applying for a credit card. It's going to go down a point or two, but it's going to go back up again.
Okay.
But also too, if you feel the need to shop around for a mortgage because maybe you speak to one lender and you're not really all that comfortable with them, and then you call me and you feel more comfortable with me, and I have to pull your credit report, you actually have 30 to 45-day window to pull your credit report where the credit bureaus recognize that it's through a financial institution and your credit score does not change.
Okay.
Does not
So
change.
I'm glad that I touched on that because I know
Me
people
too.
are afraid of that. Yeah. Yeah.
Correct. Yep.
For
Nope.
sure. Yeah. They
So
think, "Oh my God, every time I go to a mortgage broker, they're gonna ding my credit and ding my
yeah.
credit, and it's gonna drop 50 points." And then, yeah. All right.
Yeah, no,
Great.
absolutely
So,
not. But I am going to say if you're shopping for a mortgage and you're shopping for a car and you're shopping for credit cards all at the same time, that will affect your credit score. It's
okay.
only if you are just shop and when you're shopping for a mortgage, I'll just say that, do not be going to apply for credit cards and car loans. That
Right.
that just doesn't
Right.
just don't.
Especially when you're in the middle of buying a house, you're not going to do that either, right? That would be the worst
Correct.
thing to do.
Yeah.
Right.
And that, I mean, especially after you start the loan application, do definitely do not be doing that.
Right. Yeah. I'm
That'll
sure
get
you've come across that, right? Where you're like, "Oh my God, why did you do that?" Yeah.
I but I actually I had that happen to me once a long time ago. Um, we were almost at the end of the mortgage process, and the underwriter will, for everybody, they do run an additional credit inquiry just to make sure that nothing pops up. Well,
Right.
this particular person that I was dealing with, a car payment actually showed up, right? So I call him up and I'm like, what's going on? So he said, well, you know, the, we're having a baby and the baby is due like any time now. And I didn't want the baby to be, my wife and my baby to be driving around in a beat up old car. So I need a new car.
I, so,
Well, we kind of fixed things, but
okay.
he seriously was in jeopardy of losing his house, right?
Right.
And then he was kind of yelling at me. I'm like, it's not my fault. I told you, do not be going out and buying stuff. You could have waited 2 weeks to buy that car. That's
Right.
crazy, right?
Right.
House,
And
car.
that's and I mean that makes a good mortgage loan officer as well. Is you're going to tell your clients, do not go out and purchase anything, do not apply for a credit card, do not do anything that could potentially drop your credit score or open up a can of worms where,
Correct.
yeah,
Well, it's not only dropping your credit score, but like with the car payment, you're adding
it's
an
a
additional
debt.
liability,
Right. Right. Yeah.
right?
It's
So
yeah.
that could have like taken him over the top where he no longer qualified for the mortgage,
Right. Right.
you know? So
Yeah. Yeah. So, anything
um,
else before we you know what too? I know that there are investment, or at least there is one investment mortgage program, right? Is it fairly new? The one that we
well,
were
there's
talking about?
actually, well, it kind of depends on what kind of investment you want to do. Like if you want to buy um, an investment property and you want to hold it and rent it, there's what's called a debt service coverage ratio loan. Now, that's a loan that you don't have to show income. There is one loan, but you need to be an investor, not it's not happening on your primary residence. So in that
So now, how wait,
particular
not to cut you off, how do you prove that you're an investor? You have an LLC or something? Yeah,
correct.
okay.
Yeah, you have to
Okay.
show proof that you are an investor. Yep.
Okay.
Mhm.
Okay. So it's not like you want to open up
No, I'm not gonna say no. I'm gonna take that back, Gene. I'm gonna take that back. You can actually call me up and say, I'm looking to buy an investment property. I'm looking to buy an investment property.
okay.
Um, what kind of loan programs do you have? And then I would say, um, we have this, debt service ratio coverage where so you don't have to be an experienced investor,
Okay.
right? You just say, I want to buy an investment property and I'm going to rent it out. I'm going to buy it. I'm going to hold it. I'm going to rent it out. So the the rental income from the property has to be more equal to or more than the mortgage payment.
And now, how do you prove that? How is that?
Okay. So we would actually get the market rental value from the appraiser.
Okay.
So once you actually start the loan process,
Right.
we request of the appraiser to give us whatever the market rental value is. But when you're looking to get pre approved, we rely on the real estate agent to give us that information.
Okay. All right.
Okay.
That's interesting.
Yep.
So up until I spoke with you and Gina Lalo, the broker of North Shore Properties that I work with, I didn't even know about that loan. I mean, is that fairly new? It's
No, it's been around for a while. It's been around for a
okay.
while.
Okay.
I
Maybe
don't
it's
know.
just more.
I don't know exactly when it came out, but when you're saying fairly new, like if it was 5 years ago, I guess that's still kind of fairly new. But I
Right.
don't really know when it first came to market. I don't really know.
Is it more? Are people starting to utilize it more? Is that why maybe? Or
Potentially. I think they do. Like people, well, I don't know. It's kind of hard to say. I guess maybe people are just more aware of it now,
and
right?
now with that loan, can you own your own private dwelling, your own homestead, and still qualify for that loan?
Yes, because of course, yeah, in order to buy an investment property, you need to own a primary residence. You
Okay.
can't just you can't just say I right, I'm a first time home buyer. I don't want to buy my primary residence. I just want to buy an investment property. You
Okay, so you
can't you
can't.
can't do that
Okay.
because
Okay.
the underwriter is going to kind of think that you're buying the investment property without showing income, but you're going to move into the house
Right.
and make it your
Okay.
primary residence, even though it's
Okay.
not, right?
All
So
right.
you need to own your own house and then you buy the investment property.
Okay. Well, I'm glad I asked that question too for anybody that might be listening or that tunes in because they might think, "Oh, I can apply for that," and
There you
right.
go.
So
There you
yeah.
go. But yeah, I mean, but there's also, a larger down payment. You have to put down 20% or 25%. You can't, you're not that loan is not a 3 to 3.5% down payment because it is a riskier loan,
Okay.
right? So
I get it.
you
Right.
need a larger down payment.
Right. Yeah. That you don't want to lose. Yeah. I get it.
Yeah.
Oh wow. That's a lot of information, but a lot
Yeah.
of great information. I think we covered a lot of bases. What do you think?
I think we did.
All right. Is there anything else that you think that we should add that people need to know?
Well, I don't, but I mean, if anybody has any questions, I would love to answer them, but I don't,
Yes.
can you see that on your end? I have no idea.
You know what? I actually cannot. I can't see the
Oh,
comments. I don't know why. I don't
oh,
know if it's because I'm on the Riverside app and it's live streaming to the. Let me see something. Let me see. Hold on. All right. Hold on. Hold on. I do not see it. So we're
Okay.
gonna say that because this is our first go round, we're gonna work out the kinks and we're gonna be
Exactly.
back. But if anybody does have any questions, please feel free to reach out to Wendy here. Wendy, you wanna just tell
Sure.
everybody your
Yeah.
number and
So
info?
I can be reached at 516-982-6339. That is my cell phone, so you can call or you can text.
Yeah.
And also too, if you have any questions, you can reach out to Gina. Gina
Yeah, you
G.
can reach, and I will definitely refer you to my pal Wendy because she is a loan guru. She will get it. She will get it done for you if she can. Right?
Absolutely. You
Well, it
got
was
it.
so great. It was great to talk to you, and
Oh, same here. Thank you
you
for
really,
having me.
no, definitely, and definitely, we will come back around and do this again for sure with
Sounds great.
some updated stuff, maybe on some rates. I know that you don't want to talk about right now. All right. Well, thank you, Wendy. Have a great 4th of July. Okay.
Thank you. You too, Gina.
All right. All right.
All right. Bye
Bye.
bye.